Hello, my name is Russell Myers. Welcome to Issues Unite. All right, so I expect, just a moment and we will get to that. All right. I expect that we have seen the final rally of the stock market. As of Wednesday, the Federal Reserve stated that they are going to accelerate the taper and they expect to increase interest rates 3 times in 2022. Here's something that you should find particularly alarming is that Bank of America has advised stock investors to sell the most recent rally and the goal of stock market investors, they didn't have to be told to do this. I've said that this is what they're going to do. But they're going to sell off their stocks and basically try and force the Federal Reserve into reversing course. Anyway, so now we are starting to see the results of this. So that's where this comes in. This is the stock market right this moment. As you can see, the stock market is currently down, right now, 325. Now, you can see that this dropped even further, and it was down to by over 450. What you're seeing here with this dropping and then regaining, what I expect to see is that this is speculators buying the dip, but later in the same day, they are going to sell off as stocks rise. And the thing you need to understand about the stock market is that 85% or more of stocks have already been in a bear market for months, possibly most of this year. So the stock market indexes, the NASDAQ, the Dow that I just showed you, they're being held up by roughly 5 stocks. Microsoft, Apple, Google, just a very few stocks. And none of those stocks are manufacturing stocks. None of them are oil companies. None of them are vehicle companies, etc. None of them are. No, and by the way, excuse the wet hair. Now the other thing to be aware of is that top executive CEOs are selling off their stock at a rate never seen before. Elon Musk has sold off over $10 billion in Tesla stock in 5 weeks. So it's something like 11 billion. And he's probably not done yet. He claims that this has to do with paying off taxes, but only some tax issues, but only half of that amount was actually went to taxes. So he's making statements that aren't true about it. All the rest of it went straight in his pocket. I hear people say all the time, oh, well, the value, the net worth of these rich people, most of it is in stocks. Yes, but if they sell off those stocks, they sell it off for real money. So that money gets removed from the economy. But it has real consequences. And as these stocks tumble, investors, stock speculators, what they're going to want is for, people, workers, to be laid off to reduce expenses so that they can get paid. But there aren't going to be any dividends coming in the future. Going back to this, we are down below the 36,000 point. I do not expect to see the stock market go back above that 36,000 point. Now, does that mean that we are going to see a sudden catastrophic crash? No, it doesn't. I've said many times before, what I expect to see is a stair step, a downward stair step phenomenon, where, like you're seeing right now today, it'll go down, it'll come back up tomorrow, or Monday, it'll go down, come back up, but it's always going to be on a downward trajectory. Like I said, if you look at stocks other than the top 5 or 6 stocks, and you look at how they are performing, you can look at it and, okay, it's up. But today, that's only compared to yesterday. Expand the graph view of what those stocks have been doing, and that's exactly what you're seeing. You're seeing this stair-step event that is going down and down. They come up one day and then down further the next, and further, and up and down and down and down and down. So right now, this is pretty gradual because none of the interest rate hikes have taken effect as of yet. It's only been announced that it's going to happen. As soon as the first interest rate hike comes, that's when you're going to see a sudden plunge. If they cannot force the Federal Reserve to do this, which they don't really have any more leverage over the Federal Reserve, since the Federal Reserve chairman, presidents, have been forced to divulge their own investments in the very stocks which their decisions have benefited. So once you take that away and they have to divest from those stocks, then there's nothing for them personally to make decisions that are benefiting these companies. Now, of course, a Fed chair, president, can leave the Federal Reserve and go to work for one of these companies, but that doesn't guarantee that that stock is going to go up, and it may be too late by that time. And if they go to work for those companies, they're not making the decisions anymore that at the Federal Reserve level that help boost those stocks. So they might not even be offered a position on the board of these companies. The only thing those companies are going to pay for is power and influence. Anyway, so we're going to have to wait and see. I have to look into when the first rate hike is expected to take place, but it's absolutely going to happen, and it's already having its effect, and it is going to continue having a downward spiral effect. Anyway, share this video, talk about these subjects. If you can, please donate $1 a month to help expand the channel, and I will catch you in the next one. Thank you for watching. Bye.